Greetings to all our IMAPS clients and investors. Let me walk you through the latest changes to the IMAPS conservative portfolio made during the first week of April. 2024 kicked off sunny and breezy with global equity markets delivering positive returns and interest rate levels fairly stable. The mild weather drivers were resilient US economic growth, improving or stabilizing growth outside of the US, easing financial conditions, and the broadening of the AI technology trade beyond the Magnificent Seven. The second quarter still promises fair weather and relatively calm seas, although some clouds are forming on the horizon. The Fed may not be able to deliver expected cuts, or alternatively, the economy may deteriorate against expectations. In other words, the market is priced for a Goldilocks environment where the Fed is able to cut rates substantially and the economy avoids recession, and disinflation continues and remains benign. That is a tough needle to thread for an extended period of time. Monetary policy must be finely tuned to achieve it. Most credit metrics keep worsening versus recent history, and momentum-driven stocks outperformance may be getting stretched. Finally, geopolitical uncertainty seems to be here to stay, not anticipating any significant solutions to the conflict that persist around the world. Given this prevailing context, the portfolio is positioned neutral from a strategic and tactical point of view when it comes to the asset allocation, regional allocation, credit exposure, and sector selection. Instead, our focus this quarter has been centered around security selection. Managers' symbiotic features were optimized to deliver higher model efficiency while building shock absorbers at the security level. We have increased positive convexity in the fixed income sleeves, added callable preferred shares, and modified US Treasuries allocations to mitigate interest rate sensitivity. Alpha sources such as securitization, underwriting, market making were diversified to insulate portfolio from issuer-specific risk. On the equity side, we have expanded the use of short positions and derivatives to increase risk-adjusted resilience. It is important to stress that our base case remains positive market outlook for this quarter and does not warrant taking a defensive tilt. Hence, the magnitude of the aforementioned adjustments remains small on a relative basis, despite still providing a meaningful risk-adjusted enhancement. Finally, at all levels of the portfolio, complementary active managers were introduced. For instance, in high-yield bonds, emerging markets debt, and US mid-cap equities, among other sleeves. The goal was not to diversify risk away, but rather to preserve constant factor exposure while augmenting bottom-up portfolio construction. We hope you are well, and as always, please reach out to your financial advisor or investment professional with any questions you may have. Thank you.
Insigneo Financial Group, LLC comprises a number of operating businesses engaged in the offering of brokerage and advisory products and services in various jurisdictions, principally in Latin America. Brokerage products and services are offered through Insigneo International Financial Services, LLC, headquartered in Puerto Rico, and through Insigneo Securities, LLC, headquartered in Miami. Both are members of the Financial Industry Regulatory Authority, FINRA, and Securities Investors Protection Corporation, SIPC. Investment advisory products and services are offered through Insigneo Advisory Services, LLC, an investment advisor registered with the Securities and Exchange Commission. In Uruguay, advisory services are offered through Insigneo International Asesores de Inversión Uruguay, SA, Insigneo Asesores de Inversión Latam, SRL, and Insigneo Asesores de Inversión de Uruguay, SRL, in Argentina, and through Insigneo Argentina, SAU, and in Chile through Insigneo Asesorías Financieras, SPA. Collectively, these 8 operating businesses make up the Insigneo Financial Group. To learn more about the broker-dealers, including their conflicts of interest and compensation practices, please go to https://insigneo.com/disclosures/ or via www.finra.org. To learn about Insigneo Advisory Services and any conflicts related to its advisory services, please see its Form ADV and brochure, which can be found at Investment Public Advisor Public Disclosures website, https://advisorinfo.sec.gov/.